Go over the RSI divergence pattern, which would be when your RSI indicator is doing something that doesn't exactly correlate with what's happening on the candlesticks. So in this case, this is a class C bearish divergence, and that's where you have a double top on your RSI indicator, even though you're making higher highs on your chart. So this just indicates that you don't have the same momentum going into this that you did over here. So it's, yes, a higher high, but it is a weaker high. And as you can see, it hits up here and then it just kind of shows signs of weakness, just as it did down here. But this is a kind of momentum losing sign that you would look at. And this you can't really pay attention to because the entire market did this. So it's not that it would have predicted this waterfall. This just kind of happened. Now if we move on to, let's see, Tesla. So Tesla here, we have two different ones. So this one, whoops, this is a bullish divergence, and that's when the RSI is moving upwards, but the price is making a double bottom or it's moving downwards. So as you can see, this is pretty much a double bottom on Tesla, but the RSI is very cleanly moving upwards. So again, you can't pay attention to this down here because the entire market did that. But this is a very good indication of strength and momentum moving on forward from there. And then if we move back here, we have a similar thing happening. So as we're making lower lows on the stock, the RSI is trading flat or making double bottoms and slightly increasing up. And so what that shows is bullish divergence as the stock price moves down, but you have an uptick in volume and kind of a liquidity zone where Tesla's usually getting bought up, and that is in the the low 600s, which was a huge pivot point for it and a huge strong point. So as it gets down here, the RSI is kind of bottomed out and it starts to work its way back up just as Tesla is working its way down, and it starts to move up from there. So that is a bullish divergence on Tesla. And then SPY, move down to the 30-minute. And this is a bearish divergence. So what this is the RSI is moving down, and as the RSI is moving down, the stock is actually going up. So this trend line is the exact same trend line. I copy and pasted it from there just to kind of show what's happening. But the real trend on SPY is from here to there. So let me get rid of that. Now you can see that's the trend that SPY is following, and the RSI is actually working down as this is going up. And so that's a bearish indicator, that's bearish divergence. And whether or not that's kind of, if it was giving indication that this was going to be taking place, I'm not sure, but this is definitely a place where you would look to scale out of any longs that you have as the stock is going up and the RSI is working itself down. So using the RSI to spot weaknesses in the stock is extremely important. You can see that the vortex did pick it up as well. So it gave a sell signal down here and then a buy signal in here. So the RSI and the vortex, using those together really can help out spot weakness in trend or a change in direction kind of upcoming. So these are definitely the two indicators that I use most for trend reversals. But that would be bearish and bullish divergence. With charting with the same trend line is really useful. If you use a trend line down here and then you just copy it and then you move it up here, you can kind of get a direct comparison of what's going on your RSI indicator versus the stock chart. And then I also have these lines in here to pinpoint exactly where I'm looking. So that way I'm not trying to draw my line from up here and pay attention up here at the same time. I can just put my lines here and then it blocks off this section of the chart for me so I can see exactly what's happening and directly compare it to the RSI.